All right. Well, thank you so much for being with me today, Brian. This is Brian Bursick. He is the CEO and co-founder of Wunder. Wunder Capital invests in solar projects. And just to let you know, Brian, today I became a Wunder investor myself, so I'm very excited.
Thank you so much. It's great to hear.
So I guess my
Thanks
first
for having me.
question is, a lot of people, they hear about solar, like panels, solar panel manufacturing, and they might want to invest money in it. But it sounds kind of scary because we hear all the time about how solar panel manufacturers are, the price is dropping, and
Right.
there's the Geneva trade case that President Trump has pending. And so I think that might scare
Sure.
a lot of people away from solar at all, because they think, like, I don't really know what to invest in. You guys are
Right.
different. Can you explain what Wunder Capital does?
Yeah, absolutely. So I think at a high level, the first thing to observe about investing into, I think, what is a pretty exciting broad macro trend around, to your point, the falling cost of solar and therefore some explosive growth the last several years. Trying to figure out particularly what equity investments are going to be the winners amongst either the manufacturers of the hardware, which is an increasingly kind of tough game as those prices come down. And that market is frankly commoditized in a way that's really positive for the consumer, but maybe isn't great if you're manufacturing panels. Or the folks that are winning the game of going and installing an additional, 100 panels for the 50 they did last year on top of residential rooftops. So basically the installers, the Solar Cities before they got acquired, of course, by Tesla, the Sunruns, the Vivint's of the world. My opinion is that there's some really, really exciting macro trends. And so maybe a lot of diversification gets you there. But those are both relatively tough, competitive, kind of winner-take-all dynamic industries that I think investors have seen, a bouncy ride over the last several years in the equity markets, and it's hard to predict. What Wunder does is really what happens once those systems are built, and that is the ongoing, steady, warranted production of our most probably consistently priced commodity in this country, which is retail electricity. So once these solar systems are built and warranted, there are barely any moving parts. There's very little ongoing operations and maintenance. These things just generate our most consistent commodity. And so what we've done and what others in our space have done have really been, if you want to think about the kind of home analogy, we're the folks betting on mortgages with really well-built houses, whereas, betting on Solar City versus Sunrun is betting who's going to build that house. And we really like the consistency and the cash flow and, some of those dynamics like the warranties and the no moving parts that we see in solar. And so we encourage investors to really think about solar differently when they think about betting on these ongoing generation of electricity resources as opposed to who's going to win this market.
So I was just looking, because I became an investor recently myself. I was looking at the two products that you guys have right now. One of them is the Wunder Capital, which is 60-month, and it looks to target 7.5%. The other is the Wunder Income Fund, which is 120 months and looks to target around 6%. And I guess the first question that came to me, I looked at you have a $1,000 minimum investment, no investor fees, and I'm investing in clean energy. And the first thought that came to me, I'll be honest, was this sounds too good to be true. I mean, I can't get that kind of return, at the bank, and I'm investing in what I want to invest in, which is clean energy. How can you guys do that?
So one of the things that we've been able to do in our market is bring financing offers to a market that was deeply underserved, despite we think there being some great credit risk there, some really good businesses and hospitals and universities to lend to. And most of that was driven by the fixed costs associated with underwriting and structuring these deals. So, of course, when we make a $1 million loan, we're making a small percentage of that. A typical kind of underwriting cost plus loan servicing all in, if you're the one doing the structuring, might be 3 to 4%. So on a $1 million loan, $30,000 to $40,000 over the life of the loan. The traditional big kind of bespoke project financed institutions that do a great job with $10 million and $20 million energy projects just weren't servicing and still aren't servicing this really sub-$1 million, sub-$2 million market very well. And so at Wunder, our average borrower requests 512,000. That was the average last year. And so we're solidly below the point at which the fixed cost makes sense. Again, if you're doing something in the traditional bespoke manual way, what we've done at Wunder is similar to what we've seen in the last decade across commercial alternative borrowers and lenders, which is the use of software and data analysis in clever places to reduce those fixed costs. And so we're able to profitably do these hundreds of thousands of dollars of loans instead of millions of dollars of loans on a project by project basis. And because of that, there's a market inefficiency that allows us to, we hope, deliver an outsized risk return for our investors.
I like that mortgage analogy that you gave, which is basically that you're loaning money to projects that can't, well, they can fail, I suppose, but they're unlikely to fail because the sun's going to come up every day. And so basically, if the project is a good project, then it's going to generate electricity, which has a known cost to it, and it's going to pay back its loan, barring some unforeseen circumstance. So that's interesting to me. You guys go in and are loaning to kind of smaller solar projects, it sounds like.
Yeah, that's exactly right. They are smaller than what the industry supports right now using that bespoke traditional approach I described. Although what really, set us off in 2013, diving into this space was we looked up, we saw this dynamic in the market, and the obvious question is, well, how much of the market is below $1 million or $2 million, right? Is that actually a problem, right? Mm-hmm. Or is that really just small business? And so we pulled the Department of Energy data on the median U.S. business, the 50th percentile business, and based on their consumption, they would only need about $175,000 system to generate all of their power. And so when we saw that you could focus on $500,000, nearly 3 times the average business size, so a good size entity, right, by all accounts, and still be well below these minimums, we saw that actually this kind of medium large bulk of the U.S. market, and I'll describe some of the archetypes for our borrowing entities. It's like 3, 4, 5-story office space that is all over the suburbs, and we all get our dentists and doctor office visits at. The widespread warehouses you see along major interstates, relatively low consumption per square foot. So even though they're very large, they don't need huge systems. Universities and hospitals. We've done both municipal buildings. This is most of what the commercial rooftops in the U.S. need, and so we actually believe. And we're seeing more than $1 billion a year now in borrower demand. So we substantiated some of this, but we think there's a really, really big market below $1 million or $2 million.
Now, if someone out there is watching this and they run a large commercial facility or a school or something that might be, beneficial to have solar on it, how do they normally find out about companies like yours that would finance them? Because I would imagine that a lot of these companies would be like, oh, I wish we could have solar, but we can't afford it, so guess we can't do it. How do you guys connect?
Yeah, absolutely. So to date, almost all of our business has been through 155 installer partners and developers we have in more than 30 states. Okay. And so the relationship that we've had to date, think of it as they're the car dealership advertising locally, actually often in the same channels you might see a car dealership advertise, and they're bringing in that business, that hospital, that school, getting them down the sales funnel with solar. And then when you get to that quote process, we're the folks that they're bringing in as, hey, if you'd like to finance this because it's $500,000, we have a great solar specific company we like to work with, they're fast, et cetera. Here's some information. And then we would give them a preliminary quote and kind of start working through that process. But we've been lucky in that our partners do that work for us. One quick thing to say about those partners is that we actually only approve 30% of the installers and developers that apply. So we actually have a very selective process as to who we're working with. And that goes back to these systems need to be well built and operating for that value to be there, right, for us and for our investors. We have just started recently in the last few months to actually bring in some businesses through our own portal. So we launched a portion of Wunder Capital called Go Solar. If you click on the menu page, you can click on Go Solar, and it provides a savings estimate. So we built a little savings estimate tool, do some basic work based on a few pieces of information, quick analysis for the business, and then we'll actually pass you to our fairly selectively put together installer network to then take you the next step. So we're just starting to get involved with talking to businesses directly, but to date, we've been lucky in that we have this great partnership network that does a lot of that hard work for us.
I guess going back to the investor side, if there's someone on the fence right now who's like, oh, I'd like to invest in solar, but it still sounds very risky. I don't know if the panels are up to their highest technology yet, blah, blah, blah. What can you tell those investors about why you guys can expect to get such good returns? Like, why is this so safe?
Yeah, I think it does go back to that distinction between betting on the production of these systems and the value of that electricity versus trying to bet on some new technology or, frankly, a lot of the money that was lost in the aughts in the kind of clean tech boom and then bust. And so I think when you can get investors focused on the production of retail electricity, how consistently that's been priced, because it's a regulated monopoly. Mm-hmm. It's often a public utility commission and a utility really with a cost plus conversation goes up 2 to 4% a year. I mean, this is, these are the kind of things you want to bank on as an investor. And I would point to really the, what is often called a peacetime dividend in these technology booms and busts, where tons of people went bankrupt. But the folks who came out, frankly, of the last decade of tumult are to the point where the manufacturing standards, the kind of warranties they're providing are on par with other large capital expenditure type goods like automobiles and real estate. So if you really do the work to dig into the warranties and look at what's going on today, I think you'll see a very mature manufacturing industry.
Now, you guys invest in solar projects throughout the United States, is that correct?
That's correct.
And is there any interest at the moment in going outside the United States, or are you just busy enough with your your connections here in the United States?
We are busy with our work here in the U.S., so we'd want to continue to fill that pipeline of demand that I referenced, more than $1 billion a year in run rate. We're now seeing just borrowers coming in and asking for quotes on solar systems. That said, the primary consideration is really a regulatory one and a kind of investor-based one. And it just tends to be the case that investors get comfortable with a particular set of laws and regulatory dynamics. And the U.S., we're in the U.S. First of all, we're Americans. We have more resources here. But the U.S. also happens to be one of the largest capital bases, as I'm sure you know. I think what we find really exciting, but it would be hard for us to get to anytime soon, is some of the really exciting off-grid developing country work that is so important and has such huge impact, getting people off diesel in a lot of cases. In our experience, big institutional investors and small investors alike might not be comfortable with the regulatory regimes and their legal protections in some of those countries. And so us being a financing group and needing to get comfortable with the way our investors are going to be treated in these, in a workout situation where we have to, come in and exercise our rights. I think that can be a barrier. And so we're actually about to announce for Giving Tuesday an effort to direct some of Wunder's funds that direction, but that will be a more philanthropic effort than a financial one. I think until someone figures out how to solve for that regulatory comfort piece.
Now, how did you guys get into doing this? I mean, you mentioned that you looked at the investing space and you saw that there was a need. But were you coming from an environmental side? Is this purely just sheer, you can make money off it?
I have a background that combines two things. I was a venture investor for 4 years in New York City at a firm called Village Ventures, and we led the Series A of a company called On Deck Capital that is now publicly traded. And so I got to watch the broader commercial alternative lending industry develop, see what worked, what didn't, watch On Deck at a really close level go through that growth. And so I had a background in I think understanding how software applied to some of these processes and what worked and what didn't, and how you raise capital into these kind of vehicles. Our CTO actually joined us from the Department of Energy's top national lab at Lawrence Berkeley, working on software to integrate the solar into the grid for PG&E, or kind of with PG&E. So he was looking at the growth rates on the edge of the grid, right, for solar. So not these huge utility systems, but homes and businesses putting up solar systems themselves, and was shocked to see that residential had grown dramatically more than commercial, and started getting curious about why. And we had been friends for 6 years. He knew my background, and he heard again and again in the solar industry that the consensus was it was a lack of financing. It was those minimums that I was describing, where the average business needs 175,000, and these guys don't like stuff below a million or two. And so we started discussing this, and I actually have been an environmentalist for a long time. I actually started the environmental group at Bain & Company. So I was in New York at Bain & Company's office there. They did not have an internal environmental group, and as a 22-year-old, I kind of got a partner to give me some cover, and me and another junior person got that started in New York and then spread it to Bain's entire North American offices. So I had always been spending time kind of separate from my primary job, if you will, on environmental issues. But this was the first time I saw an opportunity to take my skill set and experience in alternative lending and apply it to both, frankly, a really exciting economic space, but one of our criteria was working on one of the biggest problems facing humanity as well. So that's always been part of our focus.
So it sounds kind of surprising to me that banks basically are ignoring this sector where there seems to be a lot of growth and a lot of need. Is it just because it's too small for them, there's not enough profit to be gained, or they just don't understand it?
Most of them just aren't getting the volume to launch a separate underwriting practice and team around it. So imagine you're a local bank or credit union. You're not in maybe a place like Hawaii with really expensive power. You're in New York or North Carolina, places where it's starting to get big, but there's not going to be a rush. And you see one or two or three of these solar project requests. You'll put together a loan package, but what you won't do that Wunder does is you won't underwrite the use of proceeds. You won't underwrite the system itself. Take that as collateral, know how to monetize that, know how to write that discounted cash flow model, know how to validate that it's built well and which warranties to trust and which not. Mm-hmm. You will ask them to provide some type of collateral that you already know how to underwrite, that your credit committee understands. So you'll probably ask them to put up either a personal guarantee if you're a smaller business with not a big balance sheet, which is basically putting up your kid's home to save 10 or 20% on your power bill. Not that appealing is what we hear. Or you'll have some other piece of, you'll have another asset, probably another piece of real estate that they will have already underwritten or can easily underwrite that they will then put a lien on. And so what we step in as the folks aggregating enough of this demand across 30 states, that we've done the work to underwrite the system itself. And so we can come in and say, like your capital equipment expense, like your auto fleet, all we're going to take and all you need to collateralize is what we're giving you the money to buy. And I think that's just a pitch that really resonates with them. And it also keeps them from putting additional liens on properties that is both often a hassle and something that reduces their flexibility on their balance sheet going forward.
What I really like about Wunder Capital is I kind of get the feeling that I can kind of be an angel investor. You guys do all of the the work of figuring out how to do this. I don't have to be that smart, but I get to put a little bit of my capital in there to kind of help out with investing in these projects. So I really congratulate you.
Thank you.
And thank you for doing this, because it really, I think it helps a lot of us to get involved in an area where we normally couldn't. I mean, we could invest in, maybe solar panel manufacturing and stuff, but we couldn't really be investing in these scale of solar projects, which is really exciting to me. I guess one last question is, so I'm an accredited investor, which means that I have enough income so that I can invest in projects like this. Do you have any idea if down the road you might have some products that less wealthy investors could invest in?
We desperately want to. And so the thing that we are watching most closely and think that is the most likely path to that kind of product for us, which it really has to do, frankly, with just the regulatory costs to support it, is something called Regulation A+. And so when the 2012 Jobs Act was interpreted by the SEC in 2014, they originally came down on this Regulation A ruling, which was the way that you could bring any investor into a vehicle like the ones we put together at Wunder. By the way, Regulation D was what we use with accredited investors to do this. So part of the same statute. Mm-hmm. And they ruled that you could only raise up to $5 million into those entities. And with any kind of reasonable setup costs, that's not going to pencil,
right?
Because again, we're not making the $5 million; we're making a very small percentage of that as the originator. They recently re-ruled on that. Recently, 18 months ago, re-ruled on that in something called A+, where they increased that limit to $50 million. What they haven't made it really sufficiently clear, frankly, for us and our board to feel comfortable jumping in and spending what looks like some pretty significant upfront costs, is the kind of the nitty gritty of the ongoing costs and the setup costs. And a few folks like Fundrise have kind of fearlessly jumped in that frankly have raised a little more into their coffers from folks like venture capitalists. We're about to do a raise like that ourselves. And so that might change our calculus. But there have only been a few firms that have jumped into the A+ regulations despite its promise because of that murky kind of brackish area around what the costs are going to be. And, we have to be obviously, sustainable as an entity on an ongoing basis to continue to grow this market and bring attention to it. So we would love to be the champions driving that stuff forward, but it has to make economic sense. So we are hopeful that the SEC will rule in that or provide more details in a way that makes it clearer for us to figure out how to launch one of those, because we would be ecstatic to. It pains us desperately to turn away people that want to help this movement and fund these loans and projected payments and turn them away. So we would be anxious to do so.
Yeah, because I have a feeling that our viewers, and I'd love to see comments below about how many viewers would be interested in something like this if there were less stringent rules for them to get involved. Because, I mean, with $1,000 minimum investment, it's not like they're risking, their whole nest egg on this investment. So, yeah, I would love to see the SEC kind of lighten those regulations so that you guys could open this up to more people. And that we'll be watching for that. That's great.
Absolutely. Us too.
Well, thank you so much for taking time today. I know how busy you are.
Thank you.
And thank you for doing Wunder Capital for all of us, because I'm really excited to be on board and an investor in solar projects. So thanks to all you do, and thank you for joining us today on Now You Know.
All right, great to see you. Thanks, guys.
Thanks, Brian.